Hi, this is Brent with another chart breakdown for trade therapy. We are looking at JP Morgan. JP Morgan Chase, we did a clarity spotlight on them last week. Today is Wednesday, December 4th. It's always a good idea to start with a long-term chart. We are looking at the all-time monthly chart for JP Morgan Chase. Always a good idea to look at it to figure out where in the institutional cycle this particular asset is. And we can clearly see this big institutional shelf here with a point of control roughly around 40-ish, somewhere in there. If we look at this from a just from the highest time frame perspective, we see JP Morgan out of the gate with a corrective wave A, B, C, then with an impulsive wave one, and then the dot-com uh, bubble and the great financial crisis, believe it or not, forming wave two. So we have a out of the gate corrective ABC and then a wave one, impulsive wave one, two, three, four, five. That makes wave one. Then wave two is dot-com bubble and then great financial crisis, so A, B, C. And now we've seen another impulsive structure here, which would be on a highest time frame wave three here. So one, two, and three. Notice the extension away from the 200 weekly exponential moving average. You always want to keep an eye on how far extended away price is from the longer term moving averages. You can see that when there is an extension, there's typically a return back to the mean here. And JP Morgan is pretty extended. If we take a closer look, add another layer to this, which is some Fibonacci retracements, looking at extensions here up to the 1618 on a local Fibonacci level from the post-COVID corrective period. You can see on a larger time frame, the 1618 from wave two, which bottomed with the great financial crisis. We did write about it in Clarity last week about how interesting it is that the dot-com bubble was undercut by the great financial crisis. I think the number, I don't have it in front of me, but I think the number was that it was undercut by 76 cents. And that's a little too close to be coincidental. It's just an example of how larger operators, when they see an event occurring and they identify potential weaknesses within the chart, potential liquidity, available liquidity within range, they will add a little bit of supply to a situation to take out a bottom like that. Pretty interesting if we take another a closer look at the current situation. Whenever you see on a higher time frame what we believe to be the ending of an impulsive wave. So we talked about this being wave one, wave two, and wave three. If this is truly wave five, what we want to do is look at a lower time frame and look for bearish divergence. So Elliott wave. Whenever you see wave five, always look for bearish divergence. Bearish divergence should be present when wave at the completion of a wave five. So if you are in an area of the chart that you think you see wave five completing, which we are at the golden fib level here at the 1618 from the post-COVID corrective period. Here we see a Wyckoff spring set, and we think that we are completing this wave five for JP Morgan Chase. If we jump over to the live chart here, we can see a series of bearish divergence being present whenever JP Morgan does take a dip here. We can see uh, pretty consistently through its history the development of these bearish divergent situations, which we have currently here. So, if we were to entertain a trade right here, we don't see any signs of distribution. We think this is just going to be just reaccumulation here, most likely, here at the all-time demand line here. Um, If we were to consider taking a trade, we would take a starter short position just over the all-time demand line, with a stop slightly above that. We would not consider taking any long trades at this time until this section within the chart resolves one way or the other. We think it's going to reaccumulate here. We think this will be a flat reaccumulation, probably some sort of just a standard flat wave. And just to allow some of the moving averages to catch up. The 200 weekly exponential moving average needs to catch up to price. Hope that was helpful. Hope everybody enjoyed last week's Clarity Spotlight on JP.